How much would you pay for a computer-generated squiggle line like this? Believe it or not, in September of 2021, someone paid about $2.5 million for this piece of digital art. And no, it's not painted on a canvas or something you can actually hold in your hands. What they bought was a digital certificate proving ownership, with the artwork itself stored on the blockchain. Now, if all that sounds strange or even ridiculous, you're not alone. Just a few years ago, it felt like anyone could get rich overnight buying virtual land, digital art, and all these things called NFTs. Celebrities were hyping them up, influencers were bragging about their huge wins, and the buzz made it seem like you'd be left behind if you didn't jump in. News outlets were even covering digital monkey avatars, virtual land, and all these wild things people were claiming you could own in the Metaverse. Fast forward a couple years and the bubble popped. Most of those markets crashed, leaving countless people with huge losses. Some lost thousands, others even millions, all chasing the hype. And here's the crazy part. A lot of that bad advice came from people with massive platforms, celebrities, and social media influencers. So today I want to dig into what really happened, why so many people ended up losing money, and the big lessons we can all take away about hype, social media influence, and smart investing. Now, let's rewind to 2021. In June, a digital artwork called CryptoPunk 7523 sold for $11.8 million at Sotheby's. Yep, take a look. That's what $11.8 million bought somebody. And it didn't stop there. Another one, CryptoPunk 5822, sold in February 2022 for over $23 million. Now, these come from a collection of 10,000 CryptoPunks, little pixelated, computer-generated characters. Each one is unique. So, what's the deal with these low-tech, blocky figures that honestly look like an old computer graphics on a Commodore 64 from over 40 years ago? There's a retro throwback for some of you. Well, NFT stands for non-fungible token. That's a fancy way of saying it's a digital certificate of ownership for something unique, like a piece of art, a song, or even virtual property. Non-fungible means it can't be swapped one for one like trading dollar bills. It's more like baseball cards. Each one is different. Each one has its own value. But here's the catch. When you buy an NFT, you're not actually buying the image or file itself. What you're really buying is the digital certificate that says, hey, I'm the official owner of this specific digital creation. And all of that ownership proof lies on a secure digital ledger called the blockchain. The hype around NFTs got to the point where you could honestly call it insanity. Remember back in 1975 when people were buying pet rocks? Yeah. Literally a rock in a cardboard box with a straw, air holes, and even instructions manuals for how to care for it. Fast forward to the NFT boom and check out this headline from Fortune. People were paying $200,000 for an NFT rock. One buyer even said, it's so stupid it's perfect. I mean, I guess I can definitely agree with half of that statement. At least in 1975 with the pet rock, you could actually throw it at something and you didn't need Wi-Fi to enjoy it. And it didn't stop there. Some of these digital rocks actually sold for $1.3 million. These are just a few of the examples of how far the hype and absurdity really went. I'd like to take a quick moment here to say I hope you hit the like button and leave your thoughts and comments below. I'd like to hear what you think about the video. It does support the channel and I'd sure appreciate it. Okay, it wasn't just tech enthusiasts buying NFTs. Suddenly, celebrities and influencers are jumping in too. Paris Hilton showed off her Bored Ape on late night TV. Jimmy Fallon bought one and talked about it on The Tonight Show. Steph Curry, Eminem, Snoop Dogg, Justin Bieber. They were all in on the action. Social media exploded with screenshots of huge wins, and influencers were posting things like, "Don't miss out," or "This is the future of wealth." Of course, many of them were being paid to say those things. Virtual land was getting hyped too. Back in 2021 and 2022, the Metaverse real estate was going crazy. Someone even paid $450,000 just to be Snoop Dogg's virtual neighbor. And according to Brand Essence Market Research, the Metaverse real estate market was projected to grow at a compounded annual growth rate of 31% between 2022 and 2028. Boy, that didn't age well. But as you might guess, all the hype came crashing down. So where are we now? The dream has deflated. Metaverse land prices are down 95% across the board. Trading volume has dried up. Projects are pivoting. And huge swaths of virtual space sat completely empty. How about total land trading volume across all metaverses? Down 97% since the first quarter of 2022. This wasn't just a dip, it was a full-blown implosion. And it wasn't just virtual land. By 2023, one study of over 73,000 NFT collections found that 95% were basically worthless. Even among some of the top collections, the most common price for an NFT was just $5 to $100. Over 23 million people were left holding investments that were basically worthless. To put that into perspective, the number of monthly NFT artwork sales peaked at over 117,000 in August of 2021. By June of 2024, that number had fallen more than 98%, down to just 1,764 sales. Even those headline-grabbing CryptoPunks, Bored Apes, and those high-priced NFT rocks weren't immune. There's still a market, and sales do happen. But the floor prices have collapsed, active trading has dried up, and all the buzz around the celebrities and influencers seemed to have vanished. It wasn't that the technology was broken. It was a perfect storm of speculation, social media hype, and the fear of missing out. And that's exactly why this story is such a valuable lesson for anybody tempted to chase the next big thing. So, what can we actually take away from the NFT and virtual land craze? The crash wasn't random. It came down to a few key factors. First, market saturation. Back in the 2021 NFT boom, more than 1.5 million NFTs were traded in a single month. That's a ton of supply. Way more than the demand from collectors, which is a perfect recipe for a bubble. Then there were scams and fraud, like with any hyped investment. Bad actors swooped in, rug pulls became common. That's when a group of people hypes up a collection, convinces other people to buy, and then cashes out, leaving buyers with worthless NFTs. Wash trading was another tactic, where people artificially inflated demand by buying and selling NFTs between wallets they controlled. And because the market is largely unregulated, there weren't clear protections for people who got burned. But it's not all doom and gloom. There are signs of life in the technology behind NFTs. They provide a secure, verifiable record of ownership using blockchain. That can apply to art, music, documents, or any digital asset. Think of NFTs like a digital certificate of ownership, even if the file itself is stored someplace else. And smart contracts can automatically enforce things like how many times a file can be downloaded, whether it can be modified or shared, royalties automatically paid to the creator whenever it's resold. Companies could even issue NFTs for important documents, contracts, and certificates. The blockchain can verify who owns the file, when it was created, and any conditions or expiration dates. This could even reduce fraud, simplify verification, and maybe even replace traditional notarization in some cases. Many of these ideas are still in their early stages, but big companies are investing heavily. It'll be interesting to see where it all goes. In fact, a few NFT collections have already managed to cross over into the real world. Take pudgy penguins. Their stuffed toys are now sold at Walmart, Target, and Amazon. And there's even a kids game built around them. Hopefully, people don't start treating these plush toys like investment collectibles. Remember Beanie Babies? But NFTs also open new revenue streams for creators. Musicians, writers, filmmakers, and game developers can monetize digital content in innovative ways, with royalties automatically coded into the NFT. That could make creative careers more sustainable. And the technology itself, smart contracts and blockchain, could transform industries like insurance, licensing, and supply chain tracking. Even though the bottom fell out of the NFT market, the underlying tech still has real potential. So what's the big takeaway? The NFT and virtual land boom is a cautionary tale about hype, speculation, and FOMO. The market may have crashed, but the lesson is simple. Always do your homework, understand what you're buying, and don't get swept away in the next big trend. Thanks for watching. Please let me know your thoughts about this video, and don't forget to hit that like button.